Hey traders, and welcome back to the new video of Nova Forex. Are you facing a problem of taking late entries into the market which results into a low risk to reward ratio or earning little profits from the market? Then this video is for you. So, in this video we would share the best strategy that you can use in order to get entries at correct time and not early. Now before we move on into our video, make sure that you subscribe to our channel and hit this bell icon to never miss out any of our upcoming videos. Now let us move on into our video. So, let us first see how the late entry problem occurs with the traders into the market. So, as we can see here that the market is doing the break of structure to the upside, which indicates that the market is in an uptrend. And thus, a lot of traders would find and plot a bullish order block zone or support zone at which they can buy the currency pair in order to maximize their profits into the market. So, as we can see here that the market made an inefficient candle that caused inefficiency, and which is why we can plot a bullish order block zone from its previous candle. Now a lot of traders would set their buy limit order at this bullish order block zone. We can see market making a liquidity zone of equal lows and then sweeping it to the downside in order to reach at this bullish order block zone. And then we see market going upside without reaching at this bullish order block zone. And thus, the traders who have set their buy limit orders at this bullish order block zone would initiate their buy trade at this point or this point, which is why they would earn less profits from the market, as they would keep their risk to reward ratio lower than it's before. Now this question might arise into your mind that if the market goes to upside before reaching to the bullish order block zone, then what areas should we plot in order to get entry at correct time and not late? So, we should plot the fair value gaps also along with the bullish order block zones into the market during the uptrend. Now let us understand this concept of fair value gap, which would help us in getting correct entries into the market. A fair value gap is a gap that the inefficient candle creates into the market. During the bullish trend into the market, the fair value gap is plotted into the market from the high of the previous candle of inefficient candle to the low of the next candle of the inefficient candle. And in a bearish trend, the fair value gap is plotted from the low of the previous candle of the inefficient candle to the high of the next candle of the inefficient candle. The market often comes to this gap in order to rebalance the price. Now let us see an example of a fair value gap occurring into the market. So, as you can see here that the market is doing the break of structure to the downside, which is why we can say that the market is in a downtrend, and thus, we would look for the areas like resistance zone, bearish order blocks and fair value gaps in order to take short entry into the market, which would help us in maximizing our profits into the market. So, as you can see here that the market made a bearish inefficient candle that caused inefficiency into the market, and thus, we would draw the bearish order blocks into our chart from the previous candle of this inefficient candle. And also, we would draw the fair value gap from the low of the previous candle to the high of the next candle of this inefficient candle. Now let us wait for the market to reach at one of these zones in order to initiate our short trade into the market. We can see market making the liquidity zone of trendline and then sweeping it to the upside. And thus, by seeing this, a lot of traders would set their sell limit order at this bearish order block zone in order to make up a profitable trade into the market. But the price did not come to this bearish order block zone, and instead it went below before reaching at this bearish order block zone. And thus, the sellers who have set their sell limit order at this bearish order block zone would initiate their sell trades into the market at this point or at this point, which would give them less profits. Did you notice one thing in this example? So, the market didn't respect the bearish order block zone, and instead it respected the fair value gap that this bearish inefficient candle created. And thus, the traders who have initiated their sell trade into the market from this point would have earned more than the traders who entered late into the market thinking that the market would reach at this bearish order block zone. And which is why I recommend you to plot the fair value gaps along with the bullish or bearish order block zone in an uptrend or a downtrend, as by doing so you would end up in making up a profitable trade. But the fair value gap does not always result into a profitable trade, as sometimes the market may even go below the bullish order block zone in an uptrend and above the bearish order block zone in a downtrend. Now this problem can be resolved by using the strategy that we are going to discuss into this video. Now before we move on into the strategy, we need to learn some of the concepts that are necessary to learn in order to understand the strategy properly. So, the concepts that we need to learn are multi-time frame analysis, break of structure and change of character. Let us begin with the first concept, which is multi-time frame analysis. So, the multi-time frame analysis simply means the analysis of the chart of the currency pair on different time frames such as the weekly, daily, and hourly. This analysis is done in order to know the overall direction of the market, which would help us in knowing whether to take buy position or to take sell position into the market. Now let us learn the second concept, which is break of structure. The break of structure occurs when the market breaks its previous higher high to the upside in an uptrend and its previous lower high in a downtrend. This indicates a trend continuation into the market. The third concept which is necessary to learn is change of character. The change of character occurs into the market when the market breaks its recent higher low to the downside in a bullish trend, and in a downtrend, it should break its lower high to the upside. The change of character indicates that a trend reversal may occur into the market very soon. Now that we have learned the concepts that are necessary to learn in order to understand the strategy properly, let us move on into the strategy. So, in this strategy, we would use the multi-time frame analysis along with the fair value gap to make up a profitable trade into the market. Here we have the euro-pound chart on 4-hour time frame. We can see market doing the break of structure to the upside, which indicates that the market is in an uptrend, and thus, we would look for the areas at which we can initiate our buy position into the market. We can see market making an inefficient candle, as this candle created inefficiency into the market. Now we would plot the fair value gap from the inefficient candle that the market created. And also we would draw the bullish order block zone from its previous candle. We can see market creating a liquidity zone of equal lows, and then it sweep the liquidity zone to downside in order to reach at one of these levels. Now how do we identify that which zone among both of these zones will be respected by the market? So, in order to find this, we need to wait for the market to make big candles of opposite direction. And after the market does so, we will go to the lower time frame for the change of character confirmation. So, here is a catch. In order to find a valid change of character, we need to learn about higher highs, higher lows, lower highs and lower lows. So, a bullish change of character occurs when the market goes above the lower high, which created a new lower low. Similarly, a bearish change of character occurs when the market breaks the recent higher low that created a new higher high to the downside. Now as you can see here that the market made this big green candle after reaching to this fair value gap zone. The traders who would set their buy limit order at this bullish order block zone could not initiate their buy positions into the market as the price went above after coming to this fair value gap. And thus, they would initiate their buy orders either at this point or at this point, and thus, they would get less risk to reward ratio. Now we would switch over to the lower time frame, which is the 1-hour time frame in this example. Now we would wait for the market to make a change of character in order to confirm the trend reversal into the market. So, as you can see here that the market broke this lower high to the upside, which indicates that the market has changed its character from bearish to bullish. And thus, we can say it as a bullish change of character. Now, we would draw the fair value gap from this bullish inefficient candle that the market created. And then we would wait for the market to reach at this fair value gap zone in order to initiate our buy trade into the market. We can see market reaching at this zone, and thus, we would initiate our buy trade from this point. We would keep our risk to reward ratio at 3:1. And as you can see that we ended up making up a profitable trade into the market. So, in this video, we shared the best strategy that you can use into the market which would help you in making huge profits into the market. Now if you found this video interesting, then don't forget to like the video and make sure that you subscribe to our channel and hit this bell icon to never miss out any of our upcoming videos. See you in the next video.